If you have significant capital, it is important to develop a diversified investment strategy to minimize risks and ensure stable returns. Here are some recommendations and main investment packages. Asset diversification. First and foremost, diversification is key. Spreading capital across different asset classes to reduce risks. Investing in only one asset or sector is always risky. Investment package. Real estate. This is traditionally a safe and profitable sector, especially in countries with a growing real estate market. Example, Dubai. Real estate provides a stable rental income and potential for value growth. The main approach: investments in residential and commercial properties, land plots, short-term rental properties, example through Airbnb, and investment in real estate projects in the construction phase. Securities. Stock. Investment in company stocks offers the potential for capital growth through dividends and stock price appreciation. Bonds. Bonds are considered more stable compared to stocks, providing income in the form of interest. Alternative investments. Cryptocurrencies. If you are risk tolerant, cryptocurrencies may offer high return, but this is a highly volatile market. Collectibles. Art, vintage cars, antiques, and other rare collections can also be profitable investments. Venture capital and private equity. This is a high-risk but potentially high-return category. Private companies, startups, and innovative projects can bring huge profit if successful. How to optimize investments? Regular portfolio review. Periodic checks and adjustments to your assets to avoid over-concentration in one sector. Taxation. Consult with a tax advisor to minimize tax costs on income and capital gain. Professional asset management. Consider working with an investment consultant or fund managers to help optimize your portfolio and manage risks. Is it worth investing up to 80% in real estate? Real estate investments are certainly among the safest and most stable ways to use a capital. However, 80% in one sector is quite high proportion. It can be risky if the real estate market starts to slow down or faces crisis. The optimal approach would be to have a variety of assets such as 40 to 50% capital in real estate, 20 to 30 in securities and stocks, 10 to 20 in alternative investments or cryptocurrencies, 10 in bonds or other low-risk instruments for balance. It is important to remember that when investing in real estate, especially abroad, you must consider local laws, tax consequences, and trends in the real estate market. To offer specific investment strategies, I would need more information about your preferences and goals. For example, it is important to know what level of risk are you comfortable with, low, medium, high. What period are you willing to keep the capital invested, short-term, medium-term, or long-term investments? Do you have preferences for asset types or industries, real estate, securities, cryptocurrencies, startups, collectibles, etc.? What return on investments are you seeking, percentage return or capital appreciation? What are your tax requirements or preferences? Based on this information, specific strategies can be proposed. Here are a few types of strategies that may suit you depending on your preferences. 1. Conservative strategy, low risk. Goal: preserve capital with minimal risk and stable income. Real estate, 40 to 50%. Investment in commercial real estate with long-term leases, example, offices, warehouses, retail spaces. Investment in residential real estate with long-term leases, for example, in stable regions where rental demand is steady. Opportunity for investment in REIT, Real Estate Investment Trust. For passive income, bonds 20 to 30%, debt instruments from large and reliable companies or governments with high ratings. Investment in corporate bonds or bonds from developing countries with good growth potential. Securities 10 to 20%, dividend stocks from large and stable companies. Deposits or government securities up to 10%. Moderate risk strategy, medium risk. Objective, a balanced combination of stable income and capital growth with increased profitability. Real estate up to 40 to 45%. Commercial real estate in promising areas or new developing projects. Focus on short-term rental or flipping, reselling real estate in 1 to 2 years with capital appreciation. Securities 30 to 35%, mixing high-risk stocks with more stable dividend-paying stocks. Consider investing in index funds that offer long-term growth with minimal costs. Alternative investments 10 to 15%. Private companies, startups, or venture capital projects with good growth potential. Investments in cryptocurrencies but within a reasonable limit, 5 to 10% of your capital. Bonds 10%. A portion of capital for protection against market volatility. 3. High-risk strategy, high income. Objective, active capital growth with the possibility of high returns but with readiness for high risks. Real estate, 30 to 40% investments in hot real estate markets at the construction stage with the goal of short-term resale. Special real estate projects, example luxury apartments, hotels or commercial real estate. Securities 25 to 35%. Stocks with high growth potential, example technology or biotechnology companies. Venture funds and IPOs of new companies. Alternative investments 20 to 25%. Private investments in startups or high-risk projects. Strong investments in cryptocurrencies and blockchain technologies. Collectible assets, art, antiques, rare cars, etc. Bonds 5 to 10% used for balancing and reducing portfolio volatility. Strategy number 4. Long-term growth strategy. Investing in future. Objective, sustainable capital growth with a focus on long-term investments and innovative areas. Technologies and innovations, 30 to 40%. Investments in promising technology companies or startups in areas such as artificial intelligence, biotechnology, and alternative energy. Real estate, 30 to 35%. Investments in residential and commercial projects in the construction stage, especially in countries with developing markets. Securities, 20%. Index and ETF funds for long-term growth, possibly focused on future trends. Example, ESG funds. Alternative assets, 10 to 15%. Investment in cryptocurrencies or other blockchain technologies. In Dubai and the UAE, there are many popular investment strategies. Here are the main ones, just few. Real estate, residential and commercial properties. This is one of the most popular investment options, especially for foreign investors, as real estate in the UAE typically offers stable rental income and good capitalization. Off-plan market investments, buying real estate at the construction stage with a goal of reselling upon project completion with value appreciation. Short-term rental, especially popular in tourist areas like Palm Jumeirah, Dubai Marina and others, while investors can rent properties through platforms like Airbnb. REITs, Real Estate Investment Trust, investment funds that allow investors to invest in real estate without the need for direct ownerships. Stock market, stocks and bonds. Investments in stocks and bonds of local and international companies listed on the UAE stock market, such as the Dubai Financial Market, DFM, and Abu Dhabi Securities Exchange, ADX. ETFs, exchange-traded funds. These funds allow you to invest in a diversified asset portfolio in the UAE and abroad. Precious metals, gold and silver. Investment in precious metals and very popular in the UAE, as gold is an important part of the country's cultural and economic tradition. This can include physical gold, coins, bars, gold ETFs, or companies engaged in gold mining. Cryptocurrencies. The UAE is actively developing the cryptocurrency market, especially in cities like Dubai, with its initiatives to create a crypto-friendly environment for startups and investors. There is growing interest in blockchain technologies and crypto assets. Business assets, starting or acquiring a business, opening a business or purchasing a stake in an existing company. This can include startups, small and medium-sized enterprises in various sectors such as tourism, trade, healthcare, and others. Startups and venture capital. Investments in startups and venture funds, especially in fast-growing sectors like technology, fintech, and artificial intelligence. Technology and startup investments. Dubai actively supports innovation, offering opportunities for investing in startups and technologies, fintech, healthcare, and sustainable development. Programs like Dubai Future Accelerators are aimed to supporting startups in these fields. Private capital investments and family offices. Family offices. Wealthy families and investors prefer to create their own offices to manage long-term investments and assets, including real estate, stocks, funds, and other assets. Private equity. Investment in private companies and projects can offer higher return but also higher risks. Government bonds and instruments. Government bonds, a safe investment option, especially for the long term. The UAE issue bonds that are often of interest to institutional investors and also offer comparatively high returns compared to other government debt instruments. Depending on the goals and investment horizon, an investor can choose one or more strategies to diversify their portfolios in the UAE. If you would like to explore each strategy in more detail, based on your risk profile, investment time, and potential returns, please feel free to message me on my WhatsApp. Thank you for your attention. Don't forget to like this video, subscribe to my YouTube channel, and let me know what other topic you would like to hear about.